Good afternoon, everyone. Anthony Locke with Torrey Hills Capital. Welcome to the Millennial Precious Metals webcast for March 30th, 2023. Hope everyone's doing well. Thanks for taking the time to join our virtual lunch today. We're very excited to have the management team of Millennial Precious Metals on with us to discuss the recent at-market merger with Integra Resources, as well as the concurrent financing and strategic investment by Wheaton Precious Metals. The management team has been very busy, as you just heard us talking about over the last several months, getting this deal done. And the combination of Integra and Millennial will create one of the largest precious metals development and exploration companies in the Great Basin. The combined company will have a significantly strengthened balance sheet, increased scale, and improved capital market presence with a New York Stock Exchange listing. And as you'll see during the presentation, the combined company will be trading at a discount to its peers. So we feel there's plenty of upside in the stock as the company continues to execute its strategy. With us today to discuss the merger is Millennial Precious Metals President and CEO Jason Kosec and the company's VP of Corporate Development, Jason Banducci. It's great to have you both on today, and congratulations, I think, is in order, obviously. And thanks for taking the time to update our viewers on the merger with Integra Resources. It's an exciting time for shareholders, exciting time for the company, and I'm happy to have you on with us today to discuss the company's future. But before I turn it over to Jason, I just want to mention that if you have any questions during the presentation, simply type your question into the Q&A or chat box, and we'll make sure that it gets answered. So with that said, I'm going to turn it over to Jason Kosec. Jason, the floor is yours.
Thanks a lot, Anthony, and thank you everyone for joining. We'll do a high-level presentation on this combined entity. If you want any further questions, like Anthony said, just throw them in the chat box and we can address them individually later on. What we were trying to do here, Integra and us, we're on the same path, looking at a lot of projects throughout the Great Basin. And the idea was to create that go-to vehicle that, if you want to own gold in the best jurisdiction and show scalability, scarcity, and in a management team who's done this multiple times is what we were trying to do. And this vehicle really does that and creates the go-to vehicle for retail investors and institutional investors. And really what we saw is by combining these two companies, it solves a lot of issues that commonly plague single asset companies. And what are those? Okay, there is, for lack of better words, there's always timeline risk when it comes to permitting. In the States, we will get the permit, but the timeline can be slowed up a little bit sometimes, okay, with some projects. And the beauty about this combined entity is now you don't have one asset in the race to get to a record of decision. That's your mining permit in your hand. You have three horses in the race. So Delamar will always be our flagship project. But if there's a delay, because we have multiple horses, we can pivot to the next project without impacting our timeline to cash flow. Okay. The other thing that we see in this industry, that's what we get paid to solve problems. Okay. So we're clear here. The other thing we see in the industry is that everyone talks about this Lassonde curve and the kind of the value creation cycle for explorers, developers, and producers. What happens is you have this nice liftoff during the exploration phase. Then you get into, permitting, and it comes down and it goes into this valley. They call them, valley of the orphan valley where no one cares. And you have this 2-year permitting window. And then once you get your permit, it cranks back up. So how do we solve that problem as a company and as an industry? And the beauty is by having these multiple assets, when Delamar goes into the permitting stage, Wildcat and Mountain View explode off from an exploration and resource growth story. So you backfill that valley, the orphan valley, so to speak. So this combined entity, it will boast one of the largest gold and silver resources that is not owned by a major company. It shows a production profile that will push close to 250,000 ounces per annum, with AISCs around the $900 range. And there is not anything else that out there in the basin that's not owned by a major mining company like this. And for lack of better words, there's not many things globally. Okay. With that, I will move into the formal presentation. No, I will be making some forward-looking statements. So the disclaimer is on the company's website. I encourage you to go read that. What do you get at the end of the day? Right out of the gate, you get a resource base just over 6 million ounces of gold equivalent. Okay. It's one of the largest, like I mentioned, resource endowments that's not owned by a major company. There is a significant resource growth potential here over the next year to 2 years. By the end of the year, we'll be close just over 7 million ounces in a combined production profile that'll push well over 200,000 ounces. The team is accredited to over 70 million ounces of global gold discoveries. And really what sets us apart too is with this transaction, we brought in Wheaton Precious Metals, and Wheaton is one of the biggest royalty companies in the world. They're amazing to deal with. It was a very competitive process. There was the biggest companies out there in the space writing checks. We thought that the relationship that we were building with Wheaton was the go-to, and BD Capital, which is a very respected family office, private equity type of firm that has done the project financing for Ascot, for Atlantic Gold. So from a project validation perspective, having those two partners in there is really what you want to see, because they do not come into companies that don't have real assets, so to speak. They do a lot of due diligence, so it's a major stamp of approval. Also, having those people involved in the company at this stage removes a lot of the project financing risk going forward, because that's why they're there. Okay. Really what you get, on a combined entity, Delamar, obviously the most advanced one, going into a permitting stage. The mine plan of operations will be submitted by the end of the year. That is a significant catalyst for a lot of major mining companies. Okay. Commonly, when you have that mine plan submitted on a PNAV consensus basis, they are taken out around 0.5 to 0.6. On a pro forma basis, we're going to be trading at 0.15. Okay, so there's a significant re-rating opportunity there right out of the gate. Wildcat will have the mine plan submitted by the end of 2024. Mountain View will be at the end of 2025. This is what I mean by having three horses in the race that allows us to pivot if there's a delay. And same thing why we have so many exploration assets. Of all of these, I'll tell you the truth, one will make it. And that's why we have 3 development projects and multiple exploration projects, because there will be a delay at one of these. I can tell you that right now. If anyone told you otherwise, they're lying to you. I'll tell you that for sure. And then there's a lot of assets that are in the exploration pipeline that are basically a free carry and great optionality and added torque that you are not paying for. For example, Red Canyon is 35 kilometers south of the Cortez complex, which is the Newmont Barrick joint venture. Okay. It sits in the same rocks. It has some of the best drill results drilled globally in 2021. I'm talking, 54 meters of 4.5 gram oxide right from surface. So all the major components that you look for these massive Carlin style systems, the Cortez complex is over 22 million ounces, and we sit in the same rocks 35 kilometers south of them. These are the things that you get in the portfolio that are not baked into the evaluation. So not only do you get a significant re-rating when these go to a mine plan of operation at 0.5 to 0.6, when we're at 0.15, you get stuff like this in the portfolio that can add some significant added torque. I should also mention permitted ounces in the Great Basin go for on a PNAV consensus basis at 0.89. Okay, so how do we make money as shareholders? Simple. From now till 2025, 2026, you go from 0.15 to 0.9 NAV. It's a significant value creation. Okay. I encourage anyone to really look at this transaction summary, but basically what you get at the end of the day is 0.23 of an Integra common share per Millennial common share. Okay, so it's an at market merger, 65-35 respectively for Integra. It does require a Millennial shareholder vote. 66 and 2/3. As I mentioned to Anthony at the beginning of the call, for people that didn't hear this, 50% of our shareholders are some of the biggest institutions in the world, long only gold funds, and they all participated in the financing. Management owns 10%. So to get to that quantum, 66 and 2/3 is something that management is not frazzled about. There also comes upon closing a 2.5 to 1 share consolidation. Okay, shareholder votes is scheduled for April 26th with closing in the beginning of May. The share consolidation keeps our NYSE listing and really tightens up the structure moving forward. On a pro forma basis, you look at about $120 million market cap. After the consolidation, there'll be about 73 million shares out. Significant institutional ownership and strategic ownership from Wheaton and Beatty Capital. That really sets us out from our peer group. We'll have about $35 million in the bank upon closing as well. So significant amount of runway well into 2024. Quickly overview of the DeLamar asset. You're over 120 million ounces of silver, close to just over 3 million ounces of gold endowment. This is a PFS level project, so much further advanced than Millennial's assets. The one thing that is not cooked into these numbers, you saw the press release earlier today from Integra, is they have significant resource endowment in these low-grade stockpiles that Kinross left behind. Okay, and what these stockpiles are is really about, right now when we're running our models, it's about 1 million ounces, running between 0.4 and 0.6, which will add significant value to the economics, really. Okay, they've done an amazing job, with a $10 cost per discoverable ounce, 70% increase in the resource over the last 4 years, and it's going to continue to grow. Amazing economics at an $814 all-in sustaining cash cost, and something on a standalone basis that could do over 136,000 ounces per annum. Okay. Quick summary on the PFS. 8-year mine life, 35,000 ton per day. Right now you're looking at $314 million of NAV and a 33% IRR after tax. You see the low-grade stockpiles scheduled at the tail end of the study. We got to do some optimization work that might look better at the front of it because it doesn't require as much crushing. Quick payback, 2 years. So very robust economics on a standalone basis. And by adding Millennial's asset, it just increases the production profile and obviously the NAV exposure that you get.
And with today's, I'm sorry, Jason, but with today's news on that, that mine life could be extended, obviously. Realistically, how much longer do you think it could be extended? Could it be past 11 years?
It'll get us about 4 to 5 years.
Okay.
There's about 1 million ounces in there. So call it about, conservatively about 600,000 ounces recovered. When we run our models, again, forward looking here, it adds about $200 million of US NAV to this number.
Wow.
So the DeLamar project is contributing about 500 million of NAV, and the Millennial assets are contributing about 300 million. So shareholders have exposure to about 800 million of US NAV. Okay. And as I mentioned earlier, once you submit the mine plan, that bumps you up significantly because it removes a lot of risk. Okay. And commonly when you submit a mine plan, you trade at about 0.5 to 0.6 on a PNAV consensus basis. Okay. So, 0.5 on 800 million, that's a $400 million US company. And we'll be trading coming out of the gate about 95, 90-ish. Okay. So there's, a significant re-rating opportunity. If shareholders, I'll tell you, it's a 3-year horizon to get to that 0.9 level. Now with a tailwind of gold on our back, that could be a lot quicker. Okay. We're closing in on $2,000 gold. So, really we're making $1,200 roughly on every ounce we produce. Show me a business with that type of margin. It's significant.
Yep.
And that's what we focus on. Is mining is not an easy business. Okay, that's for sure. But it's like any other business in the world. We can go into detailed metallurgy studies, and we can go into the detailed structural and alteration systems for these types of deposits. I'd love to go into it, but at the end of the day, mining is like any other business in the world, and it just comes down to margin. Okay.
Mm-hmm. So you said the mine plan submission at the end of this year. Can you pinpoint a particular, like, we talking Q4, Q3?
Yeah, it'll be Q4
Okay.
of this year. Yeah, for sure. And then, from a permitting timeline, we're expecting Delamar and Wildcat to have a record of decision sometime in 2026. So that's when you get the 0.89 multiple.
Yep.
Right. Wildcat, very exciting story. Resource sits at 776,000 ounces, grades at 0.4. But again, what makes this work, again, it just comes down to margin and economics, is that the life of mine strip is actually going to be lower than that. But it's 0.16. So what does that mean? Is that, when you look at things of grade to strip ratio, that's one of the main things that drives your economics. And Wildcat and Mountain View have the highest effective grade open pit oxide projects in the Great Basin. So, basically how much waste do you have to remove, truck, blast to get to your ore is what we're talking about. So that's a big driver of your economics. The other thing that you see here is that Wildcat has never been drilled on a full exploration plan. So we believe cold-heartedly that we could almost double this number in the next year and a half. So by that exploration euphoria that fills that kind of orphan period in the Lassonde curve, a lot of the news flow is going to be coming out of Wildcat, and it'll show significant resource growth over the next year to 2 years. Same thing with Mountain View. Grade is a little bit higher. The life of mine strip is a little bit higher. But again, this has only been drilled on 5 acres of 5,500 acres. Wildcat's only been drilled on 5 acres of 17,000 acres. So the growth potential on these projects is really what gets us exciting and gives us that exploration euphoria and that consistent news flow to the market, while in the background we're doing all the, call it boring technical engineering work and permitting work that you need to do. And frankly, a lot of companies don't do because they don't have the technical or financial capacity to do that. And along with this merger, it's important that, as I mentioned at the beginning of the presentation, this is all about securing people and assets. And Integra has done an amazing job, George and his team, of building that team out that can do all the engineering and do all the permitting work. And finding teams like that in a business where there's not many people left that can do it is very challenging. So from the team perspective, is that once this mine plan is submitted, at the end of the year at Delamar. Then that team goes to Wildcat, and then that team goes to Mountain View. Okay. And same with the build team. The build team will start off at Delamar, then it'll go to Wildcat, and then it'll go to Mountain View. So you have this waterfall effect of not only people, but the cash flow from Delamar offsets some of the CapEx at Wildcat, and then basically Mountain View will be built completely out of cash flow. Okay. So, having that is really separates us as well from our peer group. And like I said, Delamar is always number one, but if there's a delay, we could put Wildcat before, or we just build Delamar, then Wildcat. It allows us to have optionality that commonly plagues single asset companies. On a pro forma basis, as I mentioned, we'll be one of the largest gold and silver resource endowments that is not owned by a major mining company in the basin. And this number by the end of the year will be north of 7 million ounces. Okay. And really what gets me very excited as one of the largest shareholders is where we see this going is when you're north of 200,000 ounces, those companies demand, call it 600 to 1.2 billion dollar valuations. Okay. And we will gap up over a lot of our peer group in the next, really 4 to 6 years. And that demands these premium evaluations. Okay. In finding companies that can do more than 200,000 ounces a year is extremely rare. And it's even rarer in the best mining jurisdiction in the world. Okay. So what's really going to drive the value over the next couple of months here is you're going to get an updated resource that'll include the stockpiles. So that'll push us, north of that 7 million ounce range. Delamar, the mine plan will be submitted by the end of this year, Q4. You'll get an updated resource and a PEA from Wildcat and Mountain View. So on these two alone, that's going to push us over 7 million ounces and we'll be close to 800 million of US NAV. There's significant resource growth potential, both from the stockpiles and from all the additional drilling we'll be doing at Wildcat and Mountain View. We'll continue to do all the boring work in the background that market really doesn't care about, but it needs to be done. And we'll continue advancing all the engineering studies to a construction decision in 2026.
Jason, when will the next resource update be for Wildcat and Mountain View?
Should be in June.
June? Okay, thanks.
And same with Delamar resource will be in June. So once we close this in the first week of May, there'll be a resource PEA, drilling, and then permit submission, and then basically the mine plan submission for Wildcat in 2024. So some major catalysts that will drive significant value creation for anyone who wants to come in at 0.5 and take a ride with us to 0.5 and to 0.9. Really, that's it in a nutshell. Like I said, we wanted to create the go-to vehicle so that when investors, there is a gazillion amount of junior explorer developers out there, but we wanted to create a vehicle that, has a NYSE listing, has that liquidity, has that scalability, the scarcity factor, has the team that's done it, has an amazing balance sheet with some of the best institutional and strategic shareholders out there, so that when you go through the list of the 1,000 developers and explorers, we want people to drive all to this as your go-to vehicle for exposure to gold and development, with a tailwind of the gold price, breaching 2,000 here. That's all I got, Anthony.
For sure. No, and I think that gold right now is setting up for a nice little move above 2,000, and we'll probably stay there for the foreseeable future. That's the way we're looking at it right now for sure. And it's obviously clear that this merger is going to benefit both companies and create really a diverse company with a huge footprint in the Great Basin, which is pretty incredible. We're going to open it up for Q&A. If you have a question, type it into the Q&A or chat box. We'll make sure that it gets answered. Do we lose Jason?
No, I think he's there.
Okay, great. Analysts, how have they viewed the merger? Have there been any updated reports?
I can speak to that if you want. I mean, a lot of the analysts that cover, well, there's only one that covers both companies, which is PI, and they've put out a note. Phil Kerr is very supportive. Outside of that, the only other analyst to cover that hasn't written yet because they're restricted is Stifel, but they were an advisor to us on the transaction, so they're very supportive. I think the entire community on the capital market side gets it, supports it, and wants to see more of this. And so, they're just happy to see us with first mover advantage. And I think that's going to provide a huge benefit to us as we continue to build the business and grow the business going forward.
Yeah, for sure.
There's a great interview. Joe Foster, who runs the biggest precious metals fund in the United States, Van Eck, which is the ETF as well that he manages, came out publicly and said this is exactly what everyone needs to be doing, because there's just too many companies. Okay, so creating that vehicle that is the go-to vehicle is really what we did. And something you don't also realize is that there's around $2.2 million, $2.5 million of G&A savings.
Yeah.
Like that's significant.
That is.
For these smaller companies, right? Because that money can go into the ground.
Yeah, which is leads me to the next question that came through. You say you have 35 million in the bank. Basically, when this closes, what are the current spends going forward?
Yeah, we're gonna need cash by Q1 of next year, right? From all the engineering studies, all the baseline permitting work, flora, fauna, cultural, all that type of stuff, all the exploration work. There is transaction fees. There is a few change of control payments that were triggered for people that aren't coming on to the pro forma company. There's banking fees, there's lawyer fees. We try to keep those all to a minimum. So that's why we get to that $35 million number after paying all of those fees at the end of the day. It was about $4 million, I believe, Banducci, correct me if I'm wrong. 4.2 or something like that. And like I said, it'll get us to Q1 of next year. There's also, once we submit the mine plan, BD Capital, we can draw down another 10 million off their convertible note.
Okay. So, when there comes a time where you need additional capital, have you already talked to some of your institutional investors? Have you talked to Wheaton? Would you go to the market for that? What's the game plan? Obviously, a lot of different things, factors will come into play on like where the capital markets are and what the stock is doing. But what does your gut tell you?
Yeah. So, there's a lot of levers that we can pull. All of our shareholders know what the burn is. And they are very supportive and they will be supportive, and everyone will play their pro rata moving forward. So, having access to capital is not something that we don't see as an issue. We did not sell the Wheaton deal was really 9.9% of the company really in exchange for a right of first refusal. So we still haven't sold the royalty or stream or anything like that. So that's still something that we can do. There's a lot of other things that we can do too.
And Anthony, I mean, I think the key thing is the closer you get to a production decision, the closer you are to cash flow, the better the multiple you're going to be paid for a stream or royalty or any of that stuff. So the fact that we're good for a year And at that point, the mine plan of operations will be submitted for Delamar.
Mhm.
You know, Delamar is going to be in a position, that when we do the project financing or pre-project financing, a lot of times you write a royalty and the royalty will come in stage payments to get you to a production decision. There's not a whole lot of other assets in the US that are going to be in that position. So we're very confident that when we do need to finance,
that those guys will be there for us. So
Yeah. CapEx on Delamar, if I'm not mistaken, is going to be roughly in the 260, 270 range, you think? Or
yeah, we're doing those numbers obviously now internally, but it's going to be somewhere around that for the heap leach only, right? That's what we'll be doing going forward. That's what we'll be permitting, and that's what we'll be designing the engineering on, is the oxide only portion of it. The sulfides are still real, they're still there. And that's for the bigger guys down the road. They can deal with that. But it creates, like I said, that water flow effect of cash flow to offset CapEx moving forward.
right. So you obviously you're going to close this merger in the next couple months. Obviously you're going to look really good to a bigger company out there now that all these assets are consolidated. Is that even on your radar? I mean, have you been approached, or is it just way too early?
Well, it's funny. The most views that we got on a lot of our press releases and videos that we put out, it was by far the most views were from people like Barrick, like SSR, Kinross, because now with the size of the resource endowment and the production profile, we become very, very relative in a place where everyone wants to operate. Okay. The big thing for these companies is, for them to go out and do all the consolidation work is something they don't want to do.
Right.
So we've made it easy for them to do that. And the big catalyst that they want to see, Gold Standard Ventures and Orla was a prime example. Once that mine plan is submitted, that's a major catalyst for these major companies, because to get it to that stage requires a lot of capital and a lot of work.
Yeah, for sure. And what about Integra going forward? I mean, are you going to look at other opportunities out there? Is there still an opportunity for consolidation in that industry that you can take advantage of?
Yeah, I think there's a lot of stranded single asset companies that are, like I said, the cost per discoverable ounce for Integra is $10. Well, we could buy 1.5 million ounces for less than $10 million right now. Right. So there's a lot of things that we will be looking at. That being said, we need to see a significant re-rating in our paper, to be quite honest, to start going out and do that. But we will always look there. I believe there's still a lot of consolidation to happen. But we need to have the currency to go out and do that.
Yeah. Would you ever consider divesting one of the properties, or are you going to hold on to what you have, or maybe look for a JV for one of the other properties, anything like that?
But any way to create more value, we will be looking at those options.
Yeah.
I don't want to get into the weeds on that, but
Okay.
Yes, we will look at things like that going forward.
Great. So I think just to give like a brief background, how did this whole merger happen? Like, how did it end up that you got connected with Integra? How long had you guys been working on it?
So it's honestly started off, I believe, in September of last year. And what we were doing is we were looking at a lot of projects. Millennial alone, we looked at over 337 projects on a desktop review and did over 72 site visits, okay, in total. And Integra was doing the same thing. And what we were looking at is we were both doing this separately. And what we looked at is, looking for assets that are producing. And then when we looked at the producing assets that were for sale, they needed huge capital injection. There was a lot of things to fix. And they would have blown up our cap table because the ask for these production assets were just too much. Then we went into permanent assets. And there's only a few of those. And again, the ask was, 0.9 NAV. And how do we make money? Well, the answer is, we got to put them in production, but, they just didn't have the size. And then we went into the resource kind of stage that we were both at. And looking at, there's a quite a bit of projects that can do 20 to 40,000. Companies that can do, assets that can do kind of 60 to 70, there's only a handful. Ones that can do north of, the 90 into the 100, you can count them on one hand, okay? And then looking at those, looking at management teams and kind of the culture that us as Millennial and Integra kind of wanted to build, let us kind of write to each other. And luckily, I know George. I've known George for a number of years. I've known Andre for a number of years. Steve DeJong, the chairman, is also a good friend of mine. So we resolved the social issues right away that commonly plague these transactions. So the way it looks is, George will go to executive chairman because he's done such an amazing job dealing with all the stakeholders in Idaho and the government regulators. His main focus is delivering that permit for Delamar, and also obviously helping out with a number of other things, but that's kind of his focus. And my focus is really driving the strategy and the capital markets exposure to the company. So the social issues were out of the way. We saw the world through the same lens, and saw that the projects at their stages and the people really complemented each other. So it was quite a simple and fun process to go through that commonly are quite stressful.
Yeah. And our partners here at Torrey Hills know George well and speak very highly of him.
Yeah.
So yeah, he's a good guy. Couple questions. Are any of the properties on federal land?
They're all on BLM land.
Okay. Is there an immediate plan for 2023 to spin out Red Canyon with a JV partner in order to release value that currently has no value?
Yeah, we are looking at stuff like that. Again, one of the things that we are looking at is, let me just get back to, things that are in this quadrant. What we can do is JV them with a bigger mining company. These two alone require a lot of work from a drilling perspective, but they can be huge projects. Okay, so putting all these into a JV, and there's plenty of major mining companies that want projects that are at this stage, because the time it takes to get them to a drill stage, a ready stage, and the money is significant, and they don't have the time. Okay. The other thing is that in exchange to do that JV, you get a hypothetical thing that we did with one of our other companies, Sable, is you basically get a free carry to 70/30, and they have to produce a PEA at the end of it, something like that.
Yeah.
And then the major mining company would then take 9.9% of Integra. So you get money into Integra. You basically have a free carry and exposure to these projects that can be tier 1 assets for basically no further capital injected into them. And that allows us to build a strong relationship with, you know, the SSRs or the Kinrosses or the Barracks of the world or the Anglos, so that once all of these have their mine plan, you know, that relationship has already been formed.
Yeah. And Red Canyon has already shown very promising
Yeah.
results so far. I mean, are those, I don't know how deep you can get into this, but are those talks kind of ongoing, or are you just kind of talking the scenario if they come up?
I'm not going to get too deep into that. I can say that there's talks ongoing, and we'll be working on extracting maximum value out of these guys.
Yeah, for sure. Is there any difference between permitting in Idaho versus Nevada?
No, same process. The only difference is that Delamar and Mountain View require an EIS, which is a longer permitting timeline, and Wildcat just requires an EA. And the reason why is the big reason is when you have a pit lake
Mm-hmm.
and a big waste rock facility, there's a lot more impact, frankly. Whereas Wildcat, there's no pit lake and there's no waste rock facility, so it requires an EA, but it's the same permitting process.
Great. So, you know, before we wrap it up, I don't see any other questions in queue. So is there anything that could prevent this merger from happening? Like, I know you're going to get the votes. That's pretty obvious. But any additional discovery that could be an issue, or do you feel that the due diligence has been done and you guys are good to go at this point?
No, all the technical due diligence is done. Legal is all done. You know, I guess the only thing other than the vote is if there was an interloper to put it in a bigger bid, like, but you know, for that to happen is very, very rare. Not rare, okay. For that to happen on this would be rare because there's not enough groups that are up the curve from a due diligence perspective.
Yeah. Yeah, so it looks like you know, there aren't going to be any issues, and it looks like you have a lot on your plate for the next few years at least. But it's all great news, and if you look at that map right there, it's just an incredible amount of properties and just such a phenomenal area. So it's a great merger, and you know, I think it's going to be super successful going forward. I think we're going to wrap it up there. Appreciate both Jason Kosec and Jason Banducci for coming on today to get us up to speed on the merger with Integra. Obviously a game changer for both companies and shareholders too. As usual, before we wrap it up, Jason, do you have any parting words for our viewers?
No, I appreciate them all tuning in today. You know, one thing is that, you know, this is how big mining companies are built. This is exactly what Goldcorp did. This is exactly what Orla did. You know, Equinox did. You know, we're not doing something that is completely different. And these are how billion-dollar plus companies are created. And we really, you know, wanted to be primed that, you know, we believe that we're pretty much on the bottom of the equity level right now. So we wanted to be primed for that when we have that real big rush into the gold equities, which I think is coming here quite quickly, that we create a vehicle that is poised for success.